Chase by Dallas, make it hurt.
Good day, everyone. Welcome to another episode of Let's Talk Commercial Real Estate Investing, the Black Community Edition. I am your humble host, Dominic Green, Managing Partner for Tenneco Commercial Real Estate Services. And here at Let's Talk Commercial Real Estate Investing for basically the Black community. We're talking all things commercial real estate because the goal for us is to actually acquire income-producing assets in commercial real estate to fund the things that are most important to us: family, friends, endeavors, charities, nonprofits, you name it. Because when we own and control things, we have power, and with power we have influence. And I believe that commercial real estate is one of those things, in addition to, stocks and things like that, businesses. It's not an either or, it's both in and. And given that I have this is what I do full time. As far as being a managing partner, we helping small individuals buy, lease, and invest in commercial real estate. Provide my insight, information, knowledge, things that I do on a daily basis, in addition to working towards collaborating and putting together a group to invest in what I believe is the ongoing thesis and trend of affordability for affordable and workforce housing, just given the dynamics. So just kind of give you a recap today, because I was out helping a client, or in the process of helping a client look for some industrial space. And again, I'm in the Dallas-Fort Worth area, and I can tell you, industrial space there's some available, but for the type of tenant that we're looking at, where you're under roughly 10,000 square feet and under, it seems at the moment that space is very minimal, especially in a multi-tenant type situation or business park. Very limited options. Rates have held steady, and I think rates have held steady even in the office. One thing that if you don't know, that when I've said before that commercial real estate follows rooftops, commercial real estate also lags, what's happening in the broader economy. So it just takes a little time to trickle down. And with that being said, when I was having a discussion about office space in general, some people say, well, why the rates haven't went down? Well, they're holding steady. Also, there's debt covenants as well. And so for a lot of these landlords, it's better for them to maintain their asking rents and just offer you all the incentives and stuff, which effectively bring down the effective rate, right? So they're offering more in TI packages, they're offering more in free rent, and things like that. And obviously it depends on the landlord as well. Not all landlords are equally, especially if they don't own multiple properties. If it's an individual family that you're dealing with, their resources, stuff like that, can be limited. And that's the same thing with retail, right? When I told you before, retail pricing hasn't changed. It's the same thing. They're holding that. They're offering some TI. They're offering some free rent. Obviously, it depends on the tenant, what type of synergy the tenant brings to the area, and what brings to the other tenants in conjunction. Because retail is really about energy, and everybody collaborating and working together on that. And then even from an investment standpoint, not all retail is in trouble. I talked about before, net lease deals, depending on the type of credit, the type of credit tenant, the location, the type of building. If it's single tenant, multi-tenant, they're in demand. People look for safe places to put their money, earn a relatively decent return, because some of those properties are still trading between 5 and 7, depending on what it is, from DaVitas to AutoZones, to the Dollar Generals, which had been on fire before that. They've been on expansion like no other. You got Family Dollar combining with Dollar Tree in a sense, where they're kind of use space, kind of like your Taco Bell and your Pizza Hut, where they're sharing locations. Or was the Baskin Robbins and what's the other thing that's next door to it? But nonetheless, you just gotta be selective. And I think the same thing for industrial. Where I'm looking at is the multi-tenant kind of the guys that I believe they're always going to be needed, right? Your blue collar, some of your white collar financial services, but mainly your blue collar, right? Your plumbers, your electricians, your signs, the guys that do signage, marketing, and stuff like that, media. Those particular type of tenants are always looking for space. Some of them look for single tenant spaces, but as they grow, they get more assignments, especially with construction being the way it is right now, where everybody's doing in construction, all the people are in high demand, so you can continue to grow your business. And then we know this infrastructure bill, that's just more money for construction projects that's already limited on the amount of people already. So it's going to create more projects, more opportunity, more growth. So definitely seems like one of the businesses you probably should be in. Definitely we were, I guess, at one point in time. And more so than anything, we should all be in construction, right? If you got trade skills and understanding, and project management, that experience, that may be something you want to look into. Because like I said, the infrastructure bill, that money is going to go to roads, bridges, all the infrastructure, and then whatever else is tackled in that bill that, is usually 5,000 pages that hardly anybody reads. But nonetheless, opportunities. I know the cities, your city, wherever you're at, they always have projects going on. They're always needing stuff continuously. They're going to spend, hundreds of millions of dollars a year just out of necessity. And this is just going to add to it. So, those type of businesses that I think that are, even though it's service, is one of those blue collar businesses that's still going to be needed. Until I see a robot come in your house and fix your toilet and plumbing and electricity and all that good stuff. I mean, it's still going to be something that requires a physical person to actually do it. And with that said, population growth is still growing. We know that people here in Texas understand that everybody's coming here, or a good majority of people coming here. That means more houses, means more needs for services. And the cycle continues. And those people need space, right? So those kind of stuff that I look at, I'll be interested in. Kind of your bulk stuff, that's going to be more your institutional guys. The guys that your Amazons, the wholesale suppliers, the third party logistics people. You're going to get into more of the institutional, larger funds and private equity groups, as opposed to kind of on the lower end, in my opinion. But that's just what I've seen when you're looking at the data, looking at all the reports from your CBREs, in addition to what you see when you're actually on the ground. Because one thing I'll let you know, that commercial real estate is definitely a contact sport, so you got to be out there, driving around, getting the feel, all that, and looking to see what the numbers look like from the big guys that are doing, hundreds of transactions versus, some of the smaller guys like us. But nonetheless, because our target demographic, since it's small or mid-sized businesses, I mean, that's the majority of the economy, right? Your small, mid-sized businesses that are doing business, as opposed to your large businesses or conglomerates. So, all that being said, there's opportunity there. From dealing with a family issue, I'm definitely just kind of recommitted me, even more so, really pushing to get this affordable housing, especially trying to help our seniors. I know that, with fixed income and stuff like that, affordable housing is a big issue, and just the ways that they've been working to figure that out, having a mixed income to kind of subsidize, in addition to working with the city, and then obviously, your tax credits for certain projects and rehabilitation. But man, like I said, from a personal family, man, where you see that need for senior houses is realer, and it's up close and personal. When you see it, it's just really unbelievable. At some point in time, we're all going to get old, and not everyone has, done the diligent thing to have the necessary retirement funds, assets to stay in some of the more private pay locations. So, they got to live somewhere. It's one basic need. We all got to live somewhere. So, kind to take an opportunity and really focusing on that in addition to the duties I have here, because it's all part of a bigger plan, to get more people that look like us in commercial real estate. Because I believe it has the advantages. You learn on the inside and you take that information and you go forward, whatever that endeavor is. Because like I said, it's only a couple of things that, if you look at the people that are wealthy, it's either in business, stocks, they're invested in stocks, they're invested in business, they're invested in real estate, right? So kind of tough, but nonetheless, guys, I just want to drop in. This one gonna be a long video as normal as they are, but there's opportunities. Even when the market is down, somebody's making money. When our market is up, you definitely somebody's making money. But it's also about doing your due diligence, understanding the product that you're getting in, and working together. Like I said, I don't know everything. We'll never know everything. The market is too vast and wide. There's always something to learn, especially when you're talking about retail. It's a dynamic asset class. It's always changing. Office changes a little bit slower. Multifamily, the bases are there, but people want to live in certain different ways. All that changes. But like I said, the platform here is to share our experience, work together, be collaborative. We can do more together. Everybody else does for some reason. They've kind of brainwashed us into thinking that we need to be individualistic, and that's just not how it works, especially when you're dealing with business. Business is a team sport. It takes specialized people in certain areas to help you complete a transaction. I can just tell you that in general. Especially if you want to do it right, make sure you don't get sued, right? Although there will be ups and downs, you will make mistakes still with all the experts. It's about minimizing risk management, right? That's a big key to investing. Managing your risk, making things that you want to invest and try to de-risk it as much as possible to have the highest probable outcome of generating cash flow, generating a return for your investors, for yourselves, for your family. Because like I said, that's what we do it for. We're doing it for our friends, our family. Just take care of them, provide generational wealth so they're not in the same position that we were in. Because a lot of stuff wasn't told to you. A lot of stuff, some of the stuff is in the book, some of the stuff is just talking with other people. So we got to get back to that. Collaborating, sharing resources, sharing knowledge, accepting criticism when need be, but working together nonetheless. And knowing that there's a large enough pie for everybody to get some, right? It's not a small pie, it's a large pie. There's commercial real estate everywhere. No matter where you go, there's enough for everyone. So, like I said, if I can always be of help, definitely reach out to me. My information's in the video, on the channel. Don't forget to like, share, subscribe, hit that like button, share with someone. Let's continue to work together. I want to continue to try to build this Facebook group so we can continue offline as well. Because it's always hard to conversate through the video. You just see me here, but on Facebook, something we can just put out a topic and continue to have a discussion. So which that information is in here as well. So like I said, like, share, subscribe, and let's continue to work together and invest. So until next time, guys, happy investing. Reach out to someone you haven't talked to in a long time as well. Tell them you love them. Tell them you're there for them, and tell them you're just checking up on them. Trust me. Like I said, going through a situation, which may kind of hear in my voice, from a family standpoint, man, it's very, very important because you just never know. Time is, as I say, time is of the essence, and time waits for no one, and we never have enough of it. So let's try to buy as much as we can by not having to work our 9 to 5 every day, because we own assets, we control assets, and they work for us. We can own businesses that allow us to have more free time, and then to empower others that look like us to do the same, so we can be with our family and things like that. So anything else you take from it, let's work toward a common goal. You should be working to invest. You should be working in some capacity, either as a person that helps invest or a person that puts the deal together. There's opportunity for everyone. Like I said, if I can be of help, you know where I am. Education Wednesdays, right? The Black Community Edition. That's what I'm here for. And we're going to keep this thing going. And so, like I said, until next time, happy investing. Like, share, subscribe. Deuces.
These my dollars make it hurt.